All right, let's talk about silver. It's kind of notorious, right? One day it's acting like a safe haven, the next it's trading just like any other risky industrial metal. So what's really going on with its price? Let's get to the bottom of it.
You know, the source material we're looking at today makes one thing crystal clear right from the get-go. Any story that tries to pin silver's price on just one thing, it's gonna be wrong. I mean, if you've ever heard someone say, oh, silver's just going up because of inflation, or it's all about industrial demand, they're missing like half the story. The truth is, it's a whole lot messier.
So that's the big question we're tackling today. What are all the different things we should be watching? We're going to break down all these forces pulling silver's price in different directions, and we'll use the data from our analysis to try and build a much clearer picture.
Okay, first things first, we've got to get our heads around the central puzzle of silver. The thing is, it's got this split personality, and you have to understand this because it's the key to everything else.
So, on one side, you have silver, the industrial metal. It's absolutely essential for things like solar panels, electronics, you name it. So its price can move right along with global manufacturing, kind of like its cousin, copper. But then you have this other silver the monetary asset, a store of value that people buy for a lot of the same reasons they buy gold. And here's the kicker. These two identities can be in a total tug-of-war with each other, and that is why silver's price can seem so wild sometimes.
All right, so let's start peeling back the layers of this onion, shall we? We'll start with the most powerful day-to-day forces that really move the price. We're talking about the big macro drivers. And the first big one is the US dollar. You got to remember, silver, like pretty much every major commodity, is priced in dollars. So, naturally, the value of the dollar itself has a huge impact. A good way to think about it is like a seesaw.
And the data really backs us up. We're looking at a historical correlation of negative 0.37. Now, in the world of finance, that's a pretty significant number. It just means they tend to move in opposite directions. So, put simply, when the dollar gets stronger, it usually means the price of silver goes down. And when the dollar gets weaker, silver's price tends to go up. Classic seesaw.
Okay, next up, let's look at silver's industrial side. I mean, think about it. Over half of all silver gets used in industry. So it makes sense that the health of the entire global economy would be a massive driver, right? And a really easy way to keep an eye on this is to watch the price of copper, which is often seen as a bellwether for industrial health.
And again, the numbers tell the story, a positive correlation of 0.33. That tells us that, yeah, when the global economy is doing well and copper prices are on the rise, silver prices tend to ride that same wave. It all comes back to that strong industrial demand. But wait, there's more. Of course there is. Silver also tends to follow gold's lead. You know, it's precious metal's cousin. It's also really sensitive to real interest rates. That's the rate you get after you account for inflation. And this next one is absolutely crucial. During a full-blown market panic, when things get messy and liquidity just vanishes, silver's industrial personality can totally take over. It can sell off hard, just like a risky asset, which is a big difference from gold. Okay, so let's dig a little deeper into that physical demand story. This isn't so much the day-to-day stuff, but more like the long-term engine that's chugging along in the background. So where does all this silver actually go? Well, the list of uses is just exploding. It's a non-negotiable part of the green energy transition. I'm talking about solar panels in particular. It's also in pretty much every single piece of advanced electronics you can think of. Your phone, EVs, the massive data centers that run our digital world. The demand here is just immense.
Which brings us to a really interesting and honestly a super common question. You hear all the time about record high industrial demand for silver, right? So why isn't the price always just shooting for the moon? What gives?
Well, the answer is simple. Industrial demand is only one slice of the pie. You can't forget about investment demand. We're talking about people buying physical bars and coins or piling into silver ETFs. So you can absolutely have a situation where industrial demand is breaking records, but at the same time, investment demand completely falls off a cliff. The net result? The price could go sideways or even down. And that leads us perfectly into our final layer here. The influence of investors, speculators, and just the general mood of the market. Look, investor behavior can create some really powerful short-term moves. You've got speculators in the futures market who can just pour gasoline on a trend, whether it's up or down. You can literally watch the appetite of big investors by tracking the metal flowing into and out of ETFs and major vaults. And then there's the supply side, mining and recycling. That stuff matters, for sure, but you gotta remember it's slow. It adjusts over months and years, not days and weeks.
All right, So we've looked at silver's split personality, the big macro drivers, the industrial engine, and the investor influence. Now let's put it all together into a checklist you can actually use.
And let's just circle back to where we started. Any story that blames just one thing is almost certainly wrong. The real trick is understanding how all these different pieces fit together and which ones tend to pull the hardest most of the time.
So based on the analysis from our source, we can sketch out a weight map. Now look, this isn't a magic formula, but it gives you a really good sense of the pecking order. You can see right away that those core macro drivers, the dollar, real interest rates, gold, and overall risk appetite, they carry the most weight. Those are the big ones to watch day in and day out, with the industrial cycle coming in right behind them.
So, what's the takeaway? Here's a simple 3-step checklist for you. Number 1, know your time frame. Are you thinking about today's price or the trend over the next 10 years? Because different drivers matter more. Number 2, separate the hype from the hard data. A story about a local shortage of silver eagles is not the same thing as what's driving the global benchmark price. And finally, number 3, always use that multi-factor view. Before you buy into a story about one single cause, check it against all the other key drivers we've talked about.
And all this leaves us with a really fascinating question to chew on, doesn't it? For literally centuries, silver's identity as money has been a huge part of its story. But now, as the green energy transition kicks into high gear, demanding more and more silver, you have to wonder, are we watching in real time as silver's industrial side finally, and maybe permanently, overtakes its ancient role as money? Now that is something to think about.